What's up, guys? Welcome to this special episode of the Sat Signal. Today, I sit down with Australian YouTuber Jason Pizzino, who has over 350,000 subs, speaking about Bitcoin and crypto online. Now, this was a really interesting discussion because Jason is what we call an analytical swing trader, and I'm what you would call a hodler. Now, in this discussion, we talk about the difference, and the difference is actually quite interesting to watch unfold on camera because we have two different views of the world. Now, I will tell you that this podcast was a bit awkward for the first 20 minutes because I thought I was inviting a Bitcoin maxi onto my show, and that's not what Jason is. Jason's a property guy. He believes in charts and he swing trades and sees Bitcoin, yes, as a valuable asset, but just something that you make money on as it moves from one way to the other. Whereas I'm somebody who's drunk the orange Kool-Aid and believes in the cause and the mission. So it took us about 20 or 30 minutes to get past the awkward stage and get into a really meaningful chat that got better and better and better as it went along. So I think you'll find this one interesting if you stick around. There's always something to be learned, and I think you'll find it kind of good. Right at the end, I shared something that I haven't shared before on a podcast that I think will get you really thinking, and I almost wasn't going to leave it in there, but I decided to. So with that said, enjoy. If you like the content, like, subscribe, and of course, share with your friends. Thanks for watching. Bye for now. Jason, welcome to the pod, mate. Thank you so much for making some time. How are you?
Anytime. Thanks so much for having me. Great. How are you?
I'm good as gold, mate. We're both here in Bali. It seems like everybody's in Bali who's in crypto or entrepreneurship. Like, what part of the country are you in here in Indonesia?
I'm down south where the surfing is on. I think you're up a little further north.
Yeah, I'm in the middle of Canggu. So, yeah, it's so good. I'm just loving it. I'm loving the weather, loving the vibe. It's all good. But you don't live here, right, Jason? So give us the lowdown. Whereabouts are you from? Let's start there. I know you're a Gold Coast boy, but you've got a place here. Tell us a little bit about the family and your background.
Yeah, I guess the long and short of it is I was from Brisbane, 30 years, moved to the Gold Coast once I met my wife overseas. We moved back to Brisbane, and she was the one that was like, why do we just move to the Gold Coast? It's so great. We kept driving down to surf and love the life, and basically set up home there, and then decided to have kids a few years later. So yeah, pretty much that's the family life on the Gold Coast. But we have traveled a fair bit. We've been traveling a lot, and that was part of our journey a few years ago to look for another place to live in the world. And we went through Thailand and Bali and Greece and France, where there was some surfing, and Italy. And we basically just said it's going to be the Gold Coast. So that's pretty much where the family life is for now.
You're an interesting guy. I mean, you know, this show is called the Sat Signal. As you know, obviously we're a Bitcoin podcast. But what I like about you is that, you know, you've got a really broad take on it. You're not just a crypto bro or a Bitcoin maxi. You've actually sort of built wealth in a number of areas. So maybe you could talk to us about how your wealth planning or wealth creation journey has evolved, and at what point did Bitcoin and crypto become part of your, your portfolio and so on. Let's dive in there.
So I guess we could start from around 20 years ago. Started with real estate and then got into trading. So not to make it too much of a long story, that's where the beginning started. And then with the real estate side of things was basically learning from the ground up. Buy something to renovate, and then it was buying to rent, and then it was developing to small lots in Brisbane. And then I sort of scaled from that point. And then I moved into trading, which was futures markets. And that's where I started to learn to trade. And then Bitcoin came about roughly 2017, March, April was the timing there. And yeah, obviously from that point, it's just been mostly Bitcoin and crypto. It's gone through a lot of the mistakes in Bitcoin and crypto, holding, round tripping, altcoins, ICOs, which was the thing of the day. Every one of those mistakes, holding on too long because there were all these scares with USDT back in the day in 2017 and also 2021. And essentially, found myself in this position where it's just basically predominantly Bitcoin and real estate as well. And so as the wealth has grown, I've needed to find other avenues to invest in. And I'm not just a Bitcoin bro. I don't think it's just going to be a one size fits all for the entire world, as much as we all want to believe it. But from what I can understand when it comes to cycle analysis, which is how I invest, is that the majority of the gains end up in the value of land across the globe. So predominantly like your Western developed countries, that's where this land cycle comes from. And so with the gains from Bitcoin, I'm just looking to continue to buy real estate. I'll keep holding some Bitcoin, but I don't think the show's going to go on forever. I think it's going to come back at some point, and it seems like now is that real big peak that's been building over these last few years for this last cycle into the peak, and we're basically peaking with the stock markets, the commodities, real estate, and Bitcoin. You can throw Bitcoin in there now, and it's partly a commodity, partly tech.
That's interesting. So when you say you think it's going to a peak, do you mean a peak of all time peaks, or do you mean the peak of a cycle? Do you think the cycle's going to continue onward, or do you think this is the peak for Bitcoin totally?
No, I don't think it's the peak like a tulip mania peak, where basically tulips peaked and then no one's ever looked at them for the last 400 years or will ever look at them again. But I think it's probably more like a .com peak, where the NASDAQ peaked in 2000. You had the tech peaking in 2000, and then it didn't get a new all-time high for roughly 14 or so years. So there was quite a long period where it declined quite quickly. Then it rose to a lower high. The GFC happened. So that lower high was around 2007, GFC, 2009, bottom. And then it started to rise again. And then you started to see higher prices. So yeah, don't hold on to that. I think it may have been 15 or 16 years for the NASDAQ before it got to a new all-time high. But I think the S&P 500 got there in roughly 2013. So that's where I'm getting those numbers from.
So you started, if you look at Bitcoin, March 2017, from memory, Bitcoin in that year was ranged between $2,000 and $4,000. Would that be right? Somewhere in that sort of vicinity.
Are we talking Aussie or US?
US.
It was $1,200, about $1,000 to $1,200.
Okay.
That March 2017 was the China banning Bitcoin freak out. The market tanked, and then it started to climb back through April of 2017, and I got a bit more there.
Yeah. And so when you say you are taking your profits from Bitcoin and putting it into land, do you mean you're literally selling your Bitcoin portfolio as we speak now and buying land, just unimproved Australian land? Or are you buying
not land, real estate. Real estate.
Okay. Yeah. So you're buying houses.
It comes, from business and from investments. That's where I'm rolling the funds into.
And you're selling your Bitcoin down to buy real estate.
Some of it, not all of it.
Interesting.
Interesting. In a portfolio that I make public for our members, so it's not really public, but it's something that I talk about with members of our education. That in there, I've been selling off Bitcoin, and then I've got that being put into different investments. One is land, and another is precious metals at this stage. So I'm not a gold bug either. I'm just an investor. Wherever I think there is going to be more upside, that's where I'm going to put my money.
How do you explain the value of Bitcoin to people? Or do you just see it as a speculative investment? Are you sort of swing trading sentiment, or do you see a long-term use case for the asset?
Yeah, I think there's a long-term use case for Bitcoin. I just don't know if it's going to stick around through some sort of GFC event. If we get to this next point, we get to the peak in the 18-year cycle, which, we could talk about later. And then we get this multi-year bear market, so more of a collapse style, like we saw 2007 into 2009. That was about an 18-month decline in the stock market. But for real estate, that was about a 5 to 6 year decline. I don't know how Bitcoin is going to respond in that type of a event, because we've never seen Bitcoin go through a major worldwide decline. Obviously, the popular opinion is that Bitcoin should go up because it's a digital gold and gold goes up and yada yada. But gold didn't go up when we saw the recession of the early 90s. Gold was going down. It peaked in 1980 and it went down for about 20 years. So I think it's important just to, at least from my point of view, I watch the cycles and then I watch the charts. So I don't know if it's just all about being a fundamental investment that is only going to go up in these bad times, because it's just not true when it comes to gold.
So what do you think is going to happen? Like, for me, at the moment, I sort of get a sense that you're sort of waiting for the other shoe to drop. It's like this two parallel universes. You have the stock market pumping, but the man on the street seems to be under a huge amount of fiscal stress, right? Like inflation's killing everybody. People are struggling, it seems. Or at least the narrative is that people are struggling.
Yeah, it's a good point. The
narrative. The narratives. I say that because just before I interviewed you, I interviewed actually a one-on-one call with a guy who's in organic food, and he has a $1 million a month organic food business that's grown 30% year on year in Australia. And so on one hand, you hear this narrative that it's so hard in Australia and everybody's struggling. On the other hand, there's a dude I'm just talking to saying my business is just going from strength to strength, which brings into question sort of like the real impact of our echo chambers that we build, but and how we can very quickly surround ourselves with bad news, and then the Instagram gladly serves us more of the same. But what is your feeling? Like, where do you think we are cyclically in the market? Do you think we're at a market peak right now in the stock market? Because on one hand, you've got people saying, no, market's going to rip next year when they start to print. And others are like, well, Warren Buffett's all in cash and everything's going to blow up. And we tend to have negativity bias as investors. So what do you think's happening out there?
I think the stock markets still have further to go to the upside. Like when I'm talking about stock markets, I mostly focus on the US because, that's what drives cycles. That's where the most money is in the world. I know that there's probably a lot of Aussies watching, so it's not necessarily referring to the Aussie market. But US market, I think that's still got a lot further to go. But the volatility in it continues to increase the further we go up, meaning that these swings to the downside can feel like it's over. And then all of a sudden you see it rip again. The tariff collapse was a pretty significant example where you had this huge move down and then it basically came back. August 2024, we had the Japanese yen carry trade where you saw this collapse and then the market rebounded. And so on the one hand, you've got a lot of this, further upside, but then you've got the bears just calling, like the bearish type of people just calling for an end to the stock market on any single time they can, like just any sort of news, any sort of down day, that sort of thing. So to answer your question, I think there's still further upside to go in the stock market cycle before we see any sort of correction. How much further? Hard to say exactly. I'm watching for a top for the US real estate and economic cycle somewhere around 2026. And then the stock market from historical measures typically peaks after the US land and real estate cycle. Sorry, the US real estate and economic cycle. So basically the business cycle. That peaks first, then stock market.
And so what's your play for Bitcoin then? It sounds like you sort of swing trading Bitcoin. So you're trying to pick a time when you think it's going to be peak and be out of it at that point and then come back in. Is that sort of the play? Is that how you're playing it still?
Yeah. I'm not going to take everything out, but I'm going to take majority of it out. And I'm starting to build that cash position a little more. And I think as investors like yourself and anyone listening, we have a bit more flexibility in our portfolios because they're not as large as Warren Buffett. You made that reference to Warren Buffett and that he's in cash. And having been on YouTube now for 5 years, so you get to listen to what the narrative is over and over and over again, day in, day out. I've been making videos every day on my YouTube channel for 5 years for finances. The same stories cycle through every couple of months. One in particular was Warren Buffett getting into cash, and that was really popular in 2021 and in 2022 when the stock market peaked, had a bear market, and came back. And his cash position has been building ever since that point. It's actually been building ever since 2013. So his cash position has not gotten less. He just has so much money. What the hell is he going to do with it? Like, if he's all invested at the peak, he can't sell. He has to sell on the way up. And being one of the largest funds there is, he can't just necessarily sell it when he sees the market turning over, because obviously it would collapse the markets.
So with Bitcoin, again, just getting back to it, in your opinion, sure, we're seeing cycle tops now or soon, and you do think, you are a proponent that we are going to see another 4-year cycle. Is that correct? And if so, what do you see happening in this next cycle?
4-year cycle, I'm not as wedded to that. The way I look at it, so the 4-year cycle that people mostly reference is the halving cycle. Is that the one that you mostly look at, or people that you
halving and price? We had this boom in Bitcoin, and then there's a huge drawdown, and then it grinds sideways, and then there's another boom with a new high, and then a drawdown, and it generally is a 4-year cycle.
Yeah. So there's one theory of the 4-year cycle that it goes from low to low. So you measure 4 years from one low to the next low, and wherever that top ends up in that cycle, whether it's the left or the right of the halfway point, gives you the strength of that cycle. And so I think this cycle, it's confirmed it is a left translated cycle, meaning it's a strong 4-year cycle. We're seeing more upside than we do downside. Potentially the next one will be a left translated cycle, whereby it may not put in a new all-time high. It may have a rise after a decline, but that rise will be a lower high. So therefore it's a pretty weak cycle. So I think I'm watching if that happens because of the timing that I'm looking at with the real estate cycle and the stock market cycle, where now we might get a peak somewhere Q4, maybe if we're lucky early Q1, we get a decline, and then the market tries to come back from that point, maybe late 2026 or 27, puts in another high, not sure whether it's an all-time high, but then declines after that for a multi-year bear market. So that would I think that would catch a lot of people off guard, because they're expecting the same thing to happen again. 3 years up, 1 year down, 3 years up, 1 year down. But then it flips the script, and it might go up for 1 year, 1.5 years, and down then for 2.5 years, consolidate, and then start to climb up again, which would put it into alignment with the 18-year cycle, where we're looking for a low sometime around 2029, 2030, something like that.
Interesting. I mean, I can see why traders, use charts. I think for me, I think about the macro changes in the space. I'd be interested to get your take on this, because I was just talking to somebody just before this call who said, Adam, I'm new to Bitcoin. Some people are saying we're getting to the top of this cycle. There's going to be a drawdown, and then we're going to go through the same 4-year cycle, and I should wait for it to come down. And I said, well, I do agree that history might not be repeated, but it certainly rhymes, and across most assets that's true. But I think Bitcoin is quite an interesting case, and I'm aware of my optimistic bent on most things in life, but I do kind of think it's interesting that what I said to this person was the two big factors that I think are different in this cycle is, one, we have White House support that is for the first time pro crypto and Bitcoin, and given us some guidance and some framework for institutions and so on. And secondly, we have institutional support and on-ramps and all of these things now. I know back in 2017, if you'd said we'd have a president that is super supportive of Bitcoin and a White House that is creating policy around it, and we have ETFs approved, you would think, oh my God, that's just insane. And here we are. That's where we are today. And those are the two big factors that I think, if we do have a bear market, my gut is that it shouldn't draw down as much as it has in the past. Do you disagree, or do you think that's accurate? Or,
I mean, it's the same president as there was in 2017, but obviously he's changed his mind. I guess I respectfully disagree that things are going to be different. And you've been around long enough. You probably heard the saying, this time's not different in investing and trading. And to get to this point in terms of market caps and the amount of money that's in the space, we needed a different story than what we had previous cycles. So every cycle, there's got to be a different story to get the market to where it needs to go. But human psychology and human emotion never change. So the way we respond to things never changes. So therefore, we needed these events to occur. We needed to have as much money as possible to come into Bitcoin, cryptocurrencies, in order to get it to these new high prices, because the same narratives that we had in 2021, we're not going to cut it this time to have the amount of interest and increased sentiment and the amount of eyeballs and money coming in to get Bitcoin past the 100K. It's 2 trillion now. And, Ethereum and some of the other majors to be able to push them higher because of the size of their market caps. So yeah, ETFs have allowed more money to come into the space, just increasing those on-ramps. Similar to like 2013 and 2017, in 2013, there was no exchanges. Like, how did you even put money into Bitcoin? There was Mt. Gox. There's probably some random ones, but in terms of the amount of money coming into the space, you basically had to mine it. Whereas 2017, we had a few more exchanges that you could start to put your money into to bring it into the crypto sphere. And that's, again, changed. We've got more coming in. So the story changes, but the outcome generally doesn't change.
Interesting. So how do you think about, or how do you explain the difference to investors between crypto and Bitcoin? Or as a trader, do you just see them all the same? They're all just things to be traded?
So yeah, that's two different minds. Like, some people are trading, some people are investing. But if you're, the way I explain it to different people is, it depends who you want to be. Do you want to hold something long term, for the fundamentals that you're talking about? Is it something that's needed for the next stage of the world, whether we collapse or anything like that? So maybe we do need to have some Bitcoin, have some stable coins. And if you want to throw a bit of money into different cryptos, go ahead. But what we've seen over every single cycle is that the majority of cryptocurrencies, altcoins, fail, and the rest of the money just gets sucked up into Bitcoin. So provided the world continues to need some sort of alternative to the traditional finance, I think Bitcoin's got a place. And of course, stable coins also have a place. Like, it's basically the only real use case for crypto that we've seen over the last, when was Bitcoin invented? 2008, 2009. That's about 16 years. And really, it's done nothing. Cryptocurrencies have done nothing. So in terms of the difference, gamble, trade, do whatever you want with altcoins, meme coins, cryptos, NFTs. It's all just distraction. If you want something longer term, I like to look at it in terms of Bitcoin. There might be a couple of other players, your Ethereum or Solana or XRP, whatever people think is the next bigger one. But the majority of them, the other 20 million, just absolute, I don't want to say waste of time. Some people are making it, but yeah, pretty much a distraction. That's the way I see the rest of them.
Yeah, I think for me, like when Ethereum, last cycle, not this one, but when DeFi failed, the Celsius.
Oh, you think it's failed?
Well,
right.
In the previous cycle, we had Celsius, right? And it just took everybody's money, right? It collapsed and it failed in that iteration. So DeFi just died for a minute and it's coming back now. And the other use case, of course, was NFTs, and that died. And I don't know if it'll ever come back. So we see NFTs and DeFi. And when those two things went away, I was like, what is Ethereum going to be used for? You look at Solana, and there's heaps of on-chain transactions and so on in Solana. But what is the majority of its volume? Well, it's launching and trading other shitcoins. So and when you look at crypto as a space, and this is for the listeners more than you, I'm sure you're aware of this, but when AI came along, remember like 2 years ago when we're just starting to hear about AI, or 18 months ago, like AI, and then all of a sudden we start seeing all these crazy real world uses for AI, making funny videos and editing podcasts, and all all these things that you can actually do in the real world with AI. And now it's becoming crystal clear the massive real world impact that AI is going to have. And that's just in 24 months. Whereas crypto, as you point out, has been around for a decade, and most of them, I mean, how are you using crypto in the real world today? But almost no instances of it being used in the real world today. And that's why when I saw that, I got out of every altcoin other than Bitcoin, because I see Bitcoin as a completely different thing. So would you describe yourself as a trader or a long-term investor in the digital asset space?
That's a digital asset. I guess I'd have to go more on the side of swing trading, position trading, take positions for months or years because of the cycle, and that's where I'd position myself. But longer term, I mean, I still want to believe there is a space for Bitcoin longer term, especially with any sort of collapse that comes in the next few years, if it gets that bad. I don't know, maybe your listeners are on that side of the fence where it's kind of like, world's ending and we've got to get prepared for whatever is to come from the governments and that sort of thing. So there needs to be something that we can put our money into. And it is true to a degree. Like, you've seen it, you've traveled to the UK, and recently, last week, I think they're trying to put in digital IDs. And of course, Australia always follows suit with something ridiculous like that. Happens in Asia all the time with the communism and things like that. We need something else for our finances, and right now we don't really have anything else, and they're just cracking down more and more. So I think you definitely need something outside of the system, and then that's up to the individual how they go about it, whether they want to talk about it, because you just don't know what the government's capable of.
Yeah, no, I agree. It's interesting. Listening to you, it doesn't sound like you've drunk the Bitcoin Kool-Aid at all. To you, it's an asset to trade.
I think USDT and stablecoins have a better place if you're looking to transact outside of the system, because you're concerned with where the government's taking things, as opposed to using Bitcoin for that. If you want to store some wealth, then I think Bitcoin's the best place for that, for flexibility. So therefore, I'm not necessarily part of the Kool-Aid, but I think it's a good place for investing. And eventually, at some point, you should be cashing in your investment. So that's why it might not sound like I'm I'm not like drinking the Kool-Aid, because eventually I want to take some profits. Otherwise, what's the point? It's just numbers on the screen.
Yeah, I mean, and so what do you think of stable coins? You think that they have a use case in the world? Do you, like, for me, I look at stable coins and I think the US government is just going to use them as a means to deflate their debt away. Do you share that view?
How? What do you mean by that? The US government will use
they're making
coins, like current stable coins, or making their own?
No, using Tether. It's kind of a palatable. The US has kind of done this in the past, rather than them going out and creating a central bank digital currency, which would be politically quite challenging for them. It's kind of interesting that they are backing a US-based Tether, right? And it's enabling, people around the world to convert their currency to USD digitally, which then results in the Tether buying US treasuries on the back of it. So I think it's a way for them to export dollars to the rest of the world, which is why they like it. And I see it sort of having the same debasement as their fiat currency.
I mean, USDC is doing that, where the company is not obviously owned by the government, owned by Circle, and then they're creating USDC, and to back their USDC 1-for-1 or whatever they do, they're buying their treasuries to show that they're actually a legitimate company. So
creating demand for treasuries. So what I'm saying is it's creating demand for treasuries. So they're supportive of it. And I see a world where the US government will, if they see that it's grown to a point, they'll do what they did with IBM. Is it IBM or Intel, where they took a 10% stake in the company, which is sort of a backdoor way of doing the same thing, right?
Yeah, actually, you might be onto something there, because Trump's talked about taking bits of companies already. So
Yeah, and his Howard, his Lutnick, his right hand head of commerce, is exactly what he said. If we give away government contracts, the American people should be benefiting by taking stakes in these companies, which is kind of like
what China
unusual.
does.
Yeah, exactly. And so I think, that is quite a palatable way for them to export debt by using these stable coins to do their bidding for them. I mean, it's one of the most
Yeah.
profitable companies in the world is Tether. I think the guy's now one of the richest guys in the world. And it's just converting currencies into USD backed digital tokens.
Yeah, and if they keep buying these treasuries, I wonder what happens towards the peaks of these cycles. It's something that we're tracking as well, watching where the yields are going. So the US
Mm.
yields, you got the 2, the 10, and the 30. The market is obviously wanting lower interest rates, but the people and the economy wants lower interest rates, but the market has been saying otherwise. They've been showing that the interest rates need to go higher because of where the bonds sit. No one's buying these bonds. The bond prices keep going. Therefore, they need to give a higher yield to make it attractive. So at some point, something's going to give, but I don't want to be that guy that's like part of the bear crew that's just saying, now's the time. Now's the time that things are going to collapse. Now's the time. But we just got to wait to see what actually happens in the chart. So when the when all that money is continuing to print and it's not and the demand's not coming through anymore, that's going to be a time where you'll see big cracks. So those treasuries not going up anymore with all of this extra money printing, that's going to be a really problematic time because money printing just won't work at that point. And so that's one of the theories that we're kind of leaning towards for the peak of this cycle, because we've seen all the previous cycles come through. But yeah, if they keep printing money and it just doesn't work, I don't know where we go to from that point. What are your
Yeah.
thoughts there? I'm often talking to the guys who always think about this, but it'd be interesting to hear yours.
Yeah. I mean, I think we're heading to a really, I mean, we are in an experiment here. And I think most of our generation don't realize that because I was born in 1974 and we went off the gold standard in 1971. And so we've gone away from hard money right when I was born. So I've lived in this world since I was born, certainly since I was a conscious child or moving into an adult world. I've lived within the experiment, which is this experiment of print more money, doesn't have to be backed by anything. But it is an experiment, right? Like prior to that, it was gold backed, right? It was proof of work network that ran the world, right? And I think we are in the final stages of the unraveling of that experiment. And I think the US is in a dire situation. And if you take a macro view, a really drawn back Ray Dalio type of view of the world, no fiat currency, no global reserve currency has ever survived. And it always ends in conflict. If you look at The Fourth Turning, which is a book that I found absolutely fascinating, I think we are living right now through the fourth turning, and we are seeing the collapse of the empire. And people are feeling it since COVID. Australia, which is one of the hardest countries in the world to convince about Bitcoin, which is what this podcast is about, not to convince them, but to educate them and they can make their own decision. But Australia is so slow to adopt, not only because of the government's dinosaur approach to it, but because Australians are so wealthy, right? Like in my echo chamber, I hear from the awake Australians that are like, how did we vote for this government? I think both sides of the Australian political aisle right now are screwed. I don't think there's any leadership on any front. So it's not right or left to me. But Australians are too rich. They're not Bitcoin's very much a need to know basis. Trying to explain this to somebody, like I was just recently in Kuala Lumpur and I was speaking to a girl who's won Miss Universe and she won it wearing the Bitcoin dress, right? She's coming on the pod shortly. She said in where she's from, sorry, where's Bukele from?
El Salvador.
El Salvador. She's Miss El Salvador. So in El Salvador or Venezuela or Argentina, explaining Bitcoin to people is super, super easy because they understand what mismanagement of money means, and they all get their currency and immediately convert it to something harder. Explain Bitcoin to those people is easy, but Australians haven't felt it until COVID. And now I think Australians are starting to really feel like, hang on, there's something wrong here. I'm working longer, I'm working harder. My money is just not going as far because I'm actually earning more too. Like everybody's had a pay rise in the last 3 years, but it's still not even putting a dent in. I'm not keeping up with this. Is fiat money failing? They can't print it. The more they print it, the more they're causing a problem. So I think we're seeing the collapse of this experiment, which is a dishonest, evil experiment. And my view is that there is actually, with the fullness of time, it's going to collapse. It's mathematical, right? Like it's math is like gravity.
Well, it's just facts. 100% of the time it collapses. That's
it's a
the
fact.
thing that, yeah, it's a fact. The thing we don't know though is the time frame to that.
No.
And this whole collapse thing it's been talked about pretty much every single 20-year cycle. So the 18-year cycle I'm referring to often is 18 to 20 years. We have some sort of major reset, and that typically stems from a land-led recession. So I mean,
we're talking here about the collapse of the global reserve, though, which is a completely different clock. We're not talking about a real estate cycle.
Well, that's a 250 year that he talks about.
Yeah, we're not talking about a stock market cycle. We're talking about we had a war. England went broke in the war, and then the US stepped up to the plate, basically. But before the UK, it was it Spain, or I'm not sure who the global reserve was before the UK, but
the Dutch were up there somewhere. But anyway,
I think we're living through this change. And
so who do you think takes over after this point? That's the tough one.
Well, I'm hoping that it's Bitcoin. And to me, I think we live in a digital age. We live in a generation where the next generation of young people coming through are extremely comfortable with the digitization of money. The dinosaurs, the people in power right now, the boomers, they're moving on. In 10 years, they're going to be retiring and they're out. They're on their way out as we sit here. So I think, and we're seeing it with the Trump administration, we're seeing Eric Trump and JD Vance and this young generation of leaders coming through. I think the writing is clearly on the wall that the future is digital and not physical gold. And so to me, it makes sense that we have a decentralized, trustless network. But I think the US actually in the background is playing a very, very strategic game in the way that they're going about trying to control things. So, yeah, that's why I'm just fascinated that, you're basically swapping an asset that's been CAGRing at 40% a year for an asset that's CAGRing at 7% in real estate.
Fair point, yeah.
And one that is, for me, I sold my real estate because I can see that it's just a massive honeypot for the government. So yeah, no, I'd love to hear your thoughts on that. I just see them taxing it because you can't move it. And the Australian government is absolutely addicted to the revenue from stamp duty, and now spare bedroom tax is being talked about. They've lowered the land tax threshold in Melbourne, and they know that there's so much money around the real estate bubble of Australia that it's just going to become a honeypot. So I'd just be interested in your logic around that transition from an asset that has outperformed everything that you're now trading for something that's okay but being taxed.
So I'm not trading all of it for real estate now, based on where I think the cycle is going. Like I think the US will peak next year if it hasn't already peaked there, and then Australia typically follows 6 to 12 months later. That could be end of next year, could be 2027 that Australia peaks. So I think we're in that bubble territory now for the Aussie real estate. So I'm taking cash, like I'm starting to build my cash position, trying to hold on as long as I can with Bitcoin and other assets like that are moving, that are really good. But historically, when the collapse, there's always an inevitable collapse that happens. Historically, real estate doesn't fall as much, particularly if it's a solid investment as well. We're not talking tens of millions of dollar property on the coast, because that typically fluctuates 50, 60%. In the peak, it might be 30 million, then it comes down to 15 million. That's a different story. But Bitcoin doesn't produce anything. Like it doesn't have any income, whereas real estate will always have income. So it doesn't move as much, but it then depends on the volatility you want in your portfolio. So that's what I'm looking at next. And in terms of real estate for Australia, it's also a bit of protection from the banks. So I don't think the banks are all going to collapse, but you only get insured up to 250 grand per bank account. So where else can you put your money? If I put it into real estate, okay, maybe real estate in some areas will go down 10, 15, 20%. We don't know for sure, but if that happens, it didn't happen last time, it might happen this time. Well, I'm losing about 20% in the value of it. Better than having it in the bank in case the government does anything crazy. What they do in Cyprus in 2013, held the bank accounts, took 10% of different accounts there. And I know you're in Cyprus now, so it's like, where else is safe? And so now it's a matter of, where do you put that money once you've earned it? Where do you protect it? So that's why I'm still thinking of real estate. They can't necessarily touch it. Yes, they'll tax it. They can't take it from you. Otherwise, that basically collapses the system. And I don't think they want to do that yet. You can have cash, but each bank license, you're only insured up to 250 grand. Okay, open up with NAB, CBA, ANZ. Okay, you got $1 million. Doesn't really get you anything anymore in Australia. Then what? Maybe gold and silver. Gold can still go down 50% once it reaches a peak. Silver, 70%. So what do you do? Unless you've got a business that you can keep investing in. I'd like to hear you, because you're a bit further down the track in business than I am.
Yeah, no, I love having these conversations, because I think for me, my fundamental underlying bet, like when I spoke to KL last week, I basically just laid out the global assets pie and said, look, there's $1 quadrillion of assets, which is $1,000 trillion. And of those, there's like 8 categories. So there's bonds, real estate, cash, equities, fine art and collectibles, gold, and then Bitcoin, right? And so that's sort of the universe of things that an investor of any kind can put money in. And in my opinion, cash is a terrible thing to hold for any length of time, because the government, the system requires them to keep printing money. And in the simplest terms, when I say to people, if there's a community of people and who have X amount of goods in the middle, and then there's X amount of money one day, let's say there's $1 one day, and then the next day everybody has $2. Well, now, of course, you've got the same amount of people competing for the same amount of goods, but with more dollars in their pockets. So of course, the prices are just going to go up because they're competing for the same amount of goods. So this inflation problem is, and so but the system's actually built on inflation. They have to print. And at this point, the biggest economy being the US is printing like crazy, and there is no choice. They literally have to. So holding cash is you're holding something that literally is just being printed down to zero. And you can just look at it, ChatGPT or a chart, the buying power, however you want. It's down 98% in 100 years in a lifetime, right? So cash is a terrible investment. So when you look at this quadrillion thing, and you don't want to sit in cash, so you want to, as you said, you want to put it in real estate. And I'm buying a couple of homes now, again, just because I want to have some exposure outside of the small universe of stocks I own and Bitcoin. So I get it. But what I sort of think is that the world is now wising up. So from the public side, from mum and dads, they're starting to realize, hang on, I need to have a little less cash, and they're going to be pushing into one of these other assets. When I look at them, Bitcoin accounts for, if it was all on a $100 note, Bitcoin accounts for 22 cents of the $100 note, right? That's how small it is as a percentage of the overall asset pie, but it's the best performer since it's been born by a country mile. It has absolutely destroyed everything else: gold, real estate, equities, everything. So I think the reason I won't ever sell the Bitcoin, even if it does draw down a bit, is because I believe that it is a global asset that anybody in the world can buy. It's not like buying real estate, where if you want to buy something in Bali, there's all these hurdles and You just open a
And you don't
brokerage
own
account.
it.
Yeah. There's all these complexities, right? Same with stocks. It's hard to buy some stocks in some exchanges, and like you go to NAB trade and you want to buy a stock that's trading on the German exchange. So we don't support stocks. Like it's not global. Bitcoin is global. So you've got this global asset that the whole planet can see and knows about. It's one of the most famous and valuable brands in the world. It's as valuable in my mind as McDonald's or Nike. People know what Bitcoin is. So you got this global brand that operates as a financial competitor, as a place to invest money that has outperformed everything, and most of the world is on zero still. And to me, I think it might not be that the whole world switches to Bitcoin, but I think the whole world is going to come off zero, and they're going to be going, hang on, I've got all this real estate. I speak to so many Australians. Like when I was at KL, I had Australian after Australian coming up to me at Nomad Capitalist. And I spoke to Andrew Henderson, who owns Nomad Capitalist. Everyone knows Andrew. And I had
Yeah, I had him
drinks
on the
with him.
channel back in 21.
Yeah. And I
Yeah.
had the opportunity, because I was a speaker, to have a really good chat with him a couple of times. And he said Australia is one of their biggest markets. And he said, when I was at his event, Australians coming up to me going, hey, mate, I've got 30 million of real estate. I've got 100 million of real estate. One guy coming to me has $200 million worth of real estate. I'm selling down a few of my properties and buying Bitcoin. Why? Because they're seeing the things I'm saying, that governments are now realizing real estate is a honeypot for us. And so people are, because the governments are all going broke. And so I see, and fund managers have been stranded, haven't been able to buy unlisted assets of any kind. With the ETS, they can now get exposure to this spicy little thing called, Bitcoin. She's too crazy for most people to date, but you'll take her out once or twice, right? So I think we're moving into a world where the world is now going, let's get off zero. Let's just allocate 1%, 2%, 3% to spice our portfolio up and diversify. So that's the macro bet that I make, that it's so early in Bitcoin that it's still only worth a tenth of what gold's worth, right? I think gold's market cap's 25 trillion and Bitcoin's 2.2 or 2.5 or something. And I look at gold and Bitcoin as competitors, and I'm like, Bitcoin smokes it on every front. People go, well, you use gold. And I'm like, well, only 12 or 13% of gold that's mined is actually used. And most of that is jewelry, where it's not actually used. It's just a store of, it's not actually used for transistors or things like that. So anyway, that's the macro bet that I make. So I don't see it necessarily having to change the world. I just think the world coming off zero is going to create massive price appreciation. And now more than ever, with the biggest government that our lifetime has ever seen clearly publicly failing, and inflation out of control since COVID, I think we're in a very interesting moment. So for me, I'm buying Bitcoin even now. I bought $100,000 worth of Bitcoin this week at all-time highs. Do I think it'll draw down below what I paid today? Yes. Do I mind? No, because I think in 10 years, we're going to beat $1 million Bitcoin easily, probably in 5. I'd love your thoughts on all of that.
As you were talking, I'm pretty much in a similar boat in regards to Bitcoin and the long term. I know I've said a few times, like, I'm not sure, because we haven't seen through a land-led recession. So we haven't seen a land-led recession. You know what that means?
No.
Like, it means the recession stems from land prices collapsing. So we saw one in 2007 through to 2006 was the top, through to the low 2011, 2012. That was when land prices come down, and they come down and it holds everything down for years. Another one we saw was the end of the Japanese boom in the 80s. So the late 80s, early 90s, you had a couple of years there where it was a land-led recession. Whereas other recessions that people reference are like 2020, when that was essentially a pandemic and we had a bit of a banking crisis in early 2023. But none of that held the market down for very long. So we've never seen Bitcoin go through a land-led recession when things do eventually turn down. So that's my hesitation at this point. But everything else that you've said, I tend to agree on when it comes to Bitcoin long term.
You don't think that might trigger a movement into an asset that's not correlated with land?
It very well could. I just don't know because I don't have any
Like if
history
real
to go
estate,
from.
if real estate starts to underperform,
But then do people flock to Bitcoin? Like, where do they flock to?
I
And
don't. Yeah,
typically
that's the question.
it's
Yeah.
cash. And historically it's been cash. So it's not necessarily that cash is an investment. It's just if you think, and this goes just for trading, human psychology, you don't even have to be any sort of professional at all. It's just human psychology. If you think something is going to be cheaper tomorrow, what are you going to do? You're going to
Yeah,
wait.
you
So
go
you,
to
you
cash.
hold
Yeah.
cash. Yeah. If you think it's going to be cheaper the next day, the next day, the next week. And then when things get even worse and they extend for a longer period of time into weeks, into months, then that's where, even though fundamentally Bitcoin makes sense long term and everyone's got to be in it at some point, so it's it's a fantastic asset. It doesn't mean that people aren't just waiting, like they'll wait to buy it, and all it takes is that point in the cycle to peak and then to turn back down. So
I
that's
think
why I said as
Bitcoin.
well. Yeah,
Yeah.
go on.
I was going to say, I think Bitcoin's in some ways a bit like real estate, how people think about that. Like a lot of people, and I think now Australians have finally learned past this. But I remember 20 years ago, or 10 years ago, there were still Australians going, I'm just going to wait for real estate prices to come down. The people saying
Yeah,
that just never buy real estate
never
ever.
buy.
They
Yeah,
never buy and they never will. And I think real estate, I think Bitcoin's the same. Everybody thinks they're going to wait and time the bottom. And then, of course, they miss the bottom. And then they go, oh, now I'm too late. And then it moves more away from them. And now they're really too late. And then they wait again for it to draw down. And I think Bitcoin is, I think that's where maybe is it called the Lindy effect? I think it is when an asset's been around for more than 20 years, there's something happens in human psychology where people go, oh, okay, this thing's here now and it's not going away. And Bitcoin's coming up quickly to that 20-year anniversary now where people are like, okay, well, it didn't fail. And maybe
it's
then,
real.
yeah. And I think what's powerful, as I said to me, like we're at a $2 trillion market cap. For people who don't know what I mean, if you got all the Bitcoins in the world and multiply them by today's price, it's about $2 trillion worth of Bitcoin in the world. And I think most people don't own Bitcoin, yet it's at 2 trillion. Whereas if you ask most people, do you own a home, or do you know somebody who owns real estate, or do you own stocks, or do you know somebody who owns stocks? Of course, it's almost everybody, right? Owns a home or owns stocks. So Bitcoin's already at 2 trillion and most people don't own it, or they're sitting waiting for it to come back. So I think it's kind of an exciting time. And I think about it just very simply of like, it's a financial asset that offers certain benefits and certain downsides. Like you pointed out, it doesn't have cash flow, but it has the best performing CAGR of anything around. And it has a whole bunch of other benefits. So I just see it as a financial
Yeah, I guess it comes into the time horizons as well, because in any, and I'm definitely sounding like a pretty major bear here, but
That's
I've
fine.
been
I love
macro
it.
bullish. I've been macro bullish for years.
Yes.
For years. You can see it all on my channel. 2022, 2023 at those lows, that were big videos that I was doing day in, day out, just like this is going to be a low around this period. We could see it from sentiment. We could see it from price action. We could see it from the narrowing of ranges, just the lack of interest. So very bullish from that point. So that's all public at that time.
Yeah.
You're good.
It's good. I mean, look, Jason, it's good because you would have made a lot of people a lot of money if they bought in those lows. But of course,
the reviews are fantastic. They love it.
Well, the receipts are in, man. Like, that's where the pessimists or the bears, have their day in the sun. And I think again,
they were looking for recessions in 23. It was like the highest searched thing. When's a recession coming? 2023. Yeah.
I think it's I think this is a really interesting thing for listeners. Like there is a difference between a swing trader and just a long-term hodler. And so I come from a long-term hodler mindset, and I'm able to do that because I am in an advanced financial position, so to speak, right? Like whether it goes up or you know what I mean? Whereas most people listening are not there yet. They're trying to build their wealth. So they're trying to capitalize on the lows and optimize the highs, right?
And it's
So
never
we've
going to
got,
work.
yeah,
It's
and
so
your
hard to do it at
community.
that time. Yeah.
Yeah,
Sorry,
and
go on.
your community very much you're teaching people to create wealth through reading charts and understanding cycles. So that's why this conversation between the two of us is kind of different, because we live in two slightly different worlds. And neither is wrong, because actually both is good. One's to build and make, like literally make money by optimizing opportunity. And my opportunity is just like a much longer time horizon that doesn't account. It just says there's up and downs part of it. Whereas yours, like up and downs is it. This is how you make the money, right? Like, and they're both good, right? They're both good if you know what you're doing. And so you need to be able to, if you're a trader, as even a swing trader, guys, means somebody who's just betting on the general momentum, not a day trader, somebody who trades
No.
intraday. Jason is a swing trader, meaning he's looking for the trend. Okay, we're reaching a top about now, maybe move to cash. Wait a few months, you might be wrong for a while as it continues to get away and go higher, and you go, oh, I should have held on. And then you're trying to catch the knife on the way down and like pick as close to the bottom as you can. And so
or even wait for confirmation as it starts to turn up. That's all.
Yeah. Yes, yeah. So Jason's teaching people to try and that's what most people sort of think about how to make money. And I'm sort of like, make long-term, have a long-term use case and thesis and backup. But that's because for me, it's my passive bucket. You're talking about active, which is interesting.
And so people need an income. They'll need a business in order to invest into Bitcoin if they're in a different stage. And we're talking about how do you make some income, and then how do you protect it? How do you look after it on any stage of the cycle, really, whether we're going up or down? And just speaking of the point where you're saying about where people are at and what type of people they are in a correction or in a crash, thinking about, will Bitcoin go up or will it go down? In any sort of major correction, people put eating first. So they want to make sure they got money to eat, money to house themselves, and money to stay warm, have clothing. And so if those are getting a little bit squeezed, then people are like, well, this Bitcoin thing can just sit aside. I don't need to worry about Bitcoin right now. And that's where that sort of housing comes in, and why you don't see it fall as much and the volatility isn't as crazy. But yeah, you're right.
So look,
depending on the position, yeah, it could be much, much longer term.
Swing trading has its place. So like when Bitcoin hit its all-time lows, I'd been in Bitcoin already, I had heaps of Bitcoin. And then Bitcoin was trading down at 2022. And one thing I did is I borrowed $2 million against my real estate to buy more Bitcoin. And
massive conviction. Love it.
Yeah. And people were like, particularly close to me people, let me say, what are you doing? We're going to be paying 7% interest or whatever it was on this $2 million or 140 grand a year in interest payments. And I had a business, so I was able to pay the interest payments. So I paid 140 grand a year in interest for a couple of years. And now Bitcoin's gone from the $20,000 to $120,000. It's a 7X for using the bank's money, to buy the Bitcoin. And so that obviously created a good situation for me. And so that's swing trading a little bit, is understanding where the market's at and then being able to act with conviction based on it. But you've got to have that deep conviction, which comes from education. So maybe just changing gears for a second, Jason, because we're running out of time, but I would just love to just change gears for a second. Tell us about your business. Like, what do you do today? You run one of the biggest YouTube channels in Australia on this stuff. Tell us about the channel. How did you get into the YouTube business? And how does that business work?
Okay, let's start with the YouTube, I guess. Yeah. I've been on YouTube for quite some time, just sharing life and sharing things. Instagram I also had, but I think you've had problems with Meta before. So my old Instagram got banned or disabled or whatever. But I've been on YouTube for quite some time. I've been investing for longer, trading for longer, since 2010. And I started sharing a bit of that with friends, with family, and people wanted to know more about it. And I just felt it was a good way to discuss it online. So kind of a similar story that you hear from a lot of people. But then I found out that it was a much better way to keep a trading journal. So I go through my analysis and present that, and then I can look back how close was I to what was actually happening then? Sometimes close, sometimes not so close. And so using it as a trading journal has been a really good education for my own investing improvement over the years. So that's like how I got into it and why I keep going, because the more I keep going, the better I get. So why would I stop at this stage?
And
Um,
what was the growth journey like? Like, you start off with no subs, and how many subs do you have now?
three, 300, 358,000 on YouTube.
That's amazing, man. That's a
Yeah.
lot of subs out of Australia. Well
And it's been
done.
going for, well, it's across the world, so can't take all of that credit just from Australia.
No,
It's
but I just mean from
global.
Australia. Most Aussies, a big
Mm,
Australian born channel, there's not that many that get that big.
that's true. Yeah. And then in
Yeah.
finance, and then the niche for Bitcoin and cryptos. Um, and yeah, sorry, you're saying like the growth from that point
No,
and
yeah. Well, what was the growth just out of interest? Like year one, year two, in terms of your subs, like how did that grow? Do you
the
remember?
big
Like
turning
end of
point,
year one, what turned it around? What made it happen?
the crypto cycles were
Mm,
really volatile. So 2020, I think it was 20,000, something like that.
hmm hmm
And then as we got to the end of 2020 into that first quarter of 2021, when it was all just altcoin season, it was just absolutely bananas. That just grew hundreds. I can't even remember now, but the videos were popping off 30, 40, 50, 100,000 views per video through that period. And then I started to learn more about the YouTube industry, where it's about obviously eyeballs, attention, but you've got to make content that is valuable to people. So
hmm
I started to shift more towards that, towards the 2020, 2023, because 2021, I didn't really know what I was doing so much online. I was just talking about charts, and it didn't seem like people really wanted to know about that. They just wanted to know about what's the next latest altcoin, what's going to pop off, tell me what I'm going to do, which coin, buy now, sell now. That's all they wanted to know. And so when that died off, then I could get back to the trading and investing longer term, looking at long term charts and all that sort of stuff. So I guess a bit more boring thing. And so from that point, it's grown from there, and I've got a pretty solid base of people over the years. There's still 30 odd thousand tuning in per video as the market picks up, and that's another really good metric that we use for our investing, as you can see exactly when retail is in, or when they die off, or what they're thinking or feeling. And so when those things pick up, you see the views tick up again. You're like, okay, 40,000, 50,000, that's just a typical day now. Whereas before that was unheard of. So you can see the changes in sentiment. So one thing, it's great for education for myself and for everyone else. And then two, we get to use it for market sentiment. And when I say we, our business is myself and my brother, who's also a trader. So he's the much shorter term trader. I'm the longer term position trader.
And so do you run like a coaching community, or how can people work with you and that sort of thing? Is that how you monetize it?
That's the YouTube, yeah. So that's
Yeah.
we have a TIA premium, so it's called the Investor Accelerator, and we have a premium product there that's about the education. And then you've got live calls and courses and Discord to ask questions and that sort of thing.
Awesome. So it's just helping people build their wealth through understanding what's happening in the markets and trading it.
Yeah, basically trading crypto, trading stocks, understanding longer term cycles in the market and how to position your wealth through those cycles. And if people want to see reviews and results, check out the website, and you can just get the free reports. That'll give you a link into Discord, and we've just shown everything there in the
Structured there.
channels. Yeah,
What
it's got all the
what is the
reviews from
website?
people.
What's the website?
TIAinvestor.com.
TIAinvestor.com.
Yeah, that should be. It's the new one. You've caught me at a time when we're just about switching over from our old website. We're dropping the crypto word and going just straight with TIA Investor, especially
TI.
because of with the 18-year cycle. Like, we're very much real estate and stocks, crypto. So it's like, where do we get our income from? Well, you can trade stocks and crypto. Where do you then put your money? Real estate or whatever else you feel. Precious metals, Bitcoin, whatever. So yeah, TIAinvestor.com.
And the YouTube channel to follow you to learn more?
Jason Pizzino. You put
Jason
Jason
Pizzino.
Bitcoin, it'll come up on
Right.
YouTube.
Okay. Jason
Yeah.
Bitcoin, you'll be coming straight up.
Yep. Yeah.
So guys, follow Jason because, it's always good to just find these voices. The key is you got to find a voice that resonates with you. If you find me too bubbly and optimistic and drunk too much of the Bitcoin Kool-Aid, Jason might be more your pace, more of an analyst, more analytical. So you've got to find somebody that you trust and that you vibe with and who's got the results. And Jason has. So give him a follow and start listening to his voice if Jason's resonated with you today, because it's all these guys are here to help and serve. And you got to find somebody you like and trust.
Especially if you're just getting into crypto or Bitcoin in YouTube or on X, it's a bit of a weird world to begin with. There's just a lot of crazy attention grabbing stuff, or X is just what they call it, crypto X. Yeah.
It's crazy, right?
Yeah.
Please, if you're listening, just be super aware of the power of your echo chamber, because YouTube has just created an algorithm that they're going to know what works on you. Thumbnails with flames behind them or what you click on, that's exactly what you're going to see.
Mine are none like that. Nothing like that. It's just like a stern face, a chart, and just keep it simple.
Guys, welcome back. We just had a little failure there at the end, but we were pretty much finished. Jason, I just wanted to say thank you for coming, mate. Really appreciate you. And I hope you've enjoyed the chat. It was an interesting one. It was good. I got a lot of things to think about just talking to you.
Very much so. I really enjoyed it, and I love hearing the positive side to everything because, I'm on the trader side spectrum too much, where once things go high, you're basically in this bearish mode of like, when do I take profits? So, hearing all the positive stuff. One thing I didn't mention, I know you're about to wrap up, but we follow the Elliott wave theory, and it's been playing out to an absolute T, which is also extremely bullish right now, especially when you lead into the end of the commodity cycle. So about the Ray Dalio 250-year cycle. You got your 20-year cycles. You got your fourth turning cycles of 80 to 90 years. The commodity cycle is about 50 to 60 years, 30 years up, 30 years down, 20 to 30 up, 20 to 30 down. Towards the end of this peak, we're getting very close to this next stage, and usually the last leg is one of the big blow-off moves. So if we get there, this could be really, really big for Bitcoin. That's why I'm not selling out of everything, because I think there's still that chance, especially with guys like you around.
No, it's interesting. Like one of my best
selling
mates,
$200 million people to buy into Bitcoin, please bring them all.
Yeah, bring them all. It's funny because one of my really good mates, he's like you, he's a trader. Like to the day he dies, he like, I own Tesla shares, and he'll call me dumb bad Tesla now. We're at a high or we're at a low, and he says, I'm like, dude, I'm here for 10 years. Like, settle down. I'm okay. And anyway, about when we were at Tesla, was sitting there at 320, 330, he says, Adam, just promise me one thing. You will not just buy at market. Put in your orders, put it $5 or $10 below the ask, and just sit and wait till it's filled, right? And I had some capital that I wanted to allocate. It was like $500,000 or something. So I was like, I'd allocated like 200 of it, like doom. I said, I'm going to do what Ben tells me to do. I'm going to do this. And then, of course, it just went bang, and it jumped to 470. And I was like, fuck you, Ben. I'm trying to save $5 because my professional trader friend told me. But most of the time, he would be right. And so it's so interesting. And I think what I've learned from this, it's really understanding that it's not right or wrong. It's just different. And they both serve different needs. Being a trader is really valuable. And then being a long-term holder is also really valuable. But for a vast majority of people, they need to do some trading to build their wealth and be right. You can't be a holder with nothing. You've got to have something to hold. And so that's why I'm always very interested to talk to traders, and it's a different...
You got to have something on the line. So what your approach is fantastic for everyone that's listening, because if they don't have anything on the line, they'll have zero interest. And if you have zero interest, you're going to do nothing. So you might as well have something on the line. It's education money. If it goes down by 50%, who cares? You would have just blown it on probably sports bet or something. That's usually what Aussies are screwing around with their money. Not saying that everyone listening is a drop kick, but that's usually where money goes when people are gambling.
But as soon as you invest, you take a closer interest and you learn. Your learning accelerates dramatically, even if it's only a small 100%. Amount. And if you don't believe it, go play a game of poker and play it with no money, and then play it with even $20 each on the table. Completely changes the game, because it brings in all that emotion. And all that emotion and issues and stuff that we have attached to money comes to the fore. So interesting chat, Jason. Thanks for making the time. I appreciate you, man. Keep up the great work out there in the YouTube world. And if there's anything
Likewise with your podcast.
Thanks, mate.
Yeah.
We aspire to get to where you are, so we're going to keep going and keep learning from you. Appreciate it.
For sure. Thank you so much.
Yeah.
Thanks, everyone.
Thank you, brother. Cheers. Bye.
Cheers.
Hey there. I hope you enjoyed that episode of Unemployable. If you'd like to watch another episode, just click there.